A Timeline and History of Blockchain Technology. Part 2. 2013. The ascent of Bitcoin persisted. Coinbase said in February that it sold $1 million worth of Bitcoin at a price of more than $22 per coin in a single month. With 11 million Bitcoin in use by the end of March, the total value of the currency surpassed $1 billion. Additionally, the first known Bitcoin ATM opened in a coffee shop in Vancouver, British Columbia, in October. For digital currency, though, the news wasn't all positive. China and Thailand have both outlawed cryptocurrency. Mt. Gox's assets were taken by a U.S. federal court for money transmission without a license. Additionally, the FBI closed down the dark web marketplace Silk Road, seizing roughly 144,000 Bitcoin valued at over $1 billion. Ross Ulbricht, the creator of the platform, was sentenced to life in prison for a long list of offenses, including money laundering, drug trafficking, and computer hacking. 2014, despite obstacles, co-founder of Bitcoin magazine, Buterin's white paper recommending a decentralized application platform which subsequently led to the founding of Ethereum and the Ethereum Foundation, was one of the more significant turning points in the history of blockchain technology. Blockchain technology was first applied for purposes other than cryptocurrency, thanks to Ethereum. It gave developers a platform to create decentralized apps and offered smart contracts. Financial institutions and other sectors shifted their attention from the creation of digital money to blockchain technology as they realized and investigated the possibilities of blockchain. However, Bitcoin remained prominent, both positively and negatively. The Bitcoin exchange Mt. Gox declared bankruptcy. For money laundering, the vice chairperson of the Bitcoin Foundation was taken into custody. Furthermore, Bitcoin was categorized as private money by the UK tax office. Nevertheless, by year's end, a number of businesses had adopted Bitcoin, including Expedia, Microsoft, Overstock.com, PayPal, and the Chicago Sun-Times. The adoption of Bitcoin merely fueled the blockchain's flames. 2015, when the Ethereum Frontier Network went live. Programmers were able to create decentralized apps and smart contracts that could be implemented on an active network. Ethereum had the potential to grow into one of the most significant blockchain applications. It attracted a vibrant development community that still exists today. Furthermore, Nasdaq started a blockchain experiment. The Hyperledger initiative was started by the Linux Foundation. In order to investigate how blockchain could improve their operations, 9 significant investment banks came together to form the R3 consortium. The group expanded to include over 40 financial institutions in just 6 months. 2016. Unlike in Nakamoto's original work, where the phrase was viewed as two concepts, the term blockchain came to be accepted as a single word. The Hyperledger Project and the Chamber of Digital Commerce established a collaboration to improve industry lobbying and education. A hard fork in the Ethereum network occurred as a result of an exploit in the Decentralized Autonomous Organization Code of Ethereum. Following a breach on the Bitfinex cryptocurrency exchange, around 120,000 Bitcoin were taken, fetching a reward of almost $66 million. 2017, Bitcoin reached an all-time high of around $20,000. Japan accepted Bitcoin as legitimate money. In order to create a blockchain-based trade finance network, 7 European banks joined forces to form the Digital Trade Chain Consortium. The EOS blockchain operating system was unveiled by the Block One software business. It is built on the EOS token and is intended to facilitate for-profit decentralized applications. Roughly 15% of banks worldwide employed blockchain technology in one way or another. 2018, as the year came to an end, Bitcoin's value had dropped to roughly $3,800 as it entered its 10th year. Bitcoin payments are no longer accepted by the online payment company Stripe. Facebook, Twitter, and Google all outlawed Bitcoin advertisements. Although it forbade the selling of cryptocurrency anonymously, South Korea declared it will spend millions in blockchain projects. In an effort to hasten the development of blockchain technology, the European Commission established the Blockchain Observatory and Forum. Baidu unveiled its platform for blockchain as a service. 2019. Walmart introduced a hyperledger-based supply chain solution. In order to assist customers in creating robust Web 3.0 applications on both public and private blockchains, Amazon announced the general availability of its Amazon-managed blockchain service on AWS. Over 1 million transactions took place on the Ethereum network per day. As businesses adopted blockchain technology and decentralized applications for a range of use cases, blockchain research and development became increasingly important. 2020, according to a Deloitte poll, roughly 40% of participants used blockchain in their products, and 55% said it was a major strategic priority. Beacon Chain was introduced by Ethereum as a prelude to Ethereum 2.0. Because stablecoins promised greater stability than typical cybercurrencies, their value, which is correlated with another asset class, rose dramatically. There has been a rise in interest in using AI and blockchain to streamline corporate procedures. 2021, on November 10, 2021, Bitcoin hit an all-time high of $68,789.63. The market capitalization of Bitcoin reached over $3 trillion during its boom. After going public, Coinbase was regarded as the 7th largest new listing on the American Stock Exchange ever. The DeFi business, which provides services using blockchain-based smart contracts, expanded by an astounding 600% in just 1 year, to a valuation of $200 billion. Additionally, NFT artwork gained notoriety when it was auctioned off at Christie's for more than $69 billion in Ethereum. Prominent business people and sportsmen made an effort to profit from the explosive surge in value of Bitcoin. Elon Musk was among those who first took cryptocurrency as payment for new Tesla automobiles, while Aaron Rodgers even tried to split his multi-million-dollar NFL contract in Bitcoin. As governments and businesses explored blockchain for a range of use cases, including voting, real estate, fitness tracking, intellectual property, IoT, and vaccine delivery in the midst of the COVID-19 pandemic, interest in adopting blockchain for uses other than Bitcoin remained high. Furthermore, blockchain was now available as a service from several cloud providers, and there was a higher than ever need for certified blockchain developers. According to market researcher Statista, the size of the global blockchain technology industry was estimated to be close to $6 billion in 2021 and is expected to reach $1 trillion by 2030. 2022, NFTs kept rising, environmentally friendly blockchain networks surfaced, and corporate use of blockchain applications surged. Less than 10% of Bitcoin remains to be mined as mining has moved closer to Nakamoto's 21 million coin cap, having reached 19 million. Due to investor worries about inflation and the new COVID-19 Omicron variant, the once high prices of Bitcoin and other cryptocurrencies fell precipitously in the spring. A few Bitcoin exchangers filed for bankruptcy. The FTX exchange's bankruptcy and CEO Sam Bankman-Fried's arrest increased concerns about riskiness of cryptocurrencies. Terra, an open-source blockchain platform, also failed. Thought to help legitimize the business, rumors of new cryptocurrency regulations from the U.S. government only served to increase doubt. Due to a lack of participation, the blockchain-based TradeLens digital ledger that Maersk and IBM co-developed has been shut down globally. Furthermore, the Australian Stock Exchange abandoned a 7-year plan to switch to a blockchain for its trading platform. According to Statista, more than 100 nations participated in the development of their own digital currencies issued by central banks. In contrast to the slower speeds and more unstable prices of cryptocurrencies, CBDCs are digital representations of real-world fiat money that will someday help speed up cross-border retail transactions on blockchain. Blockchain's much heralded claims of imperviousness were challenged, and not in a good way. Nearly 200 Bitcoin or blockchain hacks were found by blockchain analysis company Chainalysis, resulting in $3.8 billion in losses. The most notable event was when $625 million worth of Ether and USDC stablecoins were declared stolen by the blockchain of the video game Ronin network. The attack was attributed by the U.S. Treasury Department to a group of North Korean hackers. 2023, the SEC brought charges against cryptocurrency entrepreneur Justin Sun and 3 of his fully owned firms for the unregistered offer and sale of crypto asset securities, and it indicted executives at the Coinbase and Binance exchanges. This was further bad news for the cryptocurrency market. Companies are still utilizing blockchain technology, but they are doing it more cautiously. Although banks and financial services have benefited most from blockchain technology, other industries with promising uses include gaming, media and entertainment, real estate, healthcare, cybersecurity, smart contracts, NFTs, Internet of Things, transportation, supply chain management, and government. However, Web 3.0, the most recent version of the Internet, may be the biggest force behind blockchain technology because it offers data security and decentralization. For the time being, Bitcoin has established itself in the $25,000 to $30,000 level. Around 2140, Bitcoin mining should hit Nakamoto's 21 million limit. After 2023. The promise of blockchain technology to enable safe and transparent transactions without the need for middlemen might fundamentally alter how businesses operate for many years to come. Blockchain will have a big impact on new and emerging technologies like AI, IoT, NFTs, and the metaverse. In contrast to the research firm's forecast of $3.1 trillion by 2030, Gartner, an American technological research and consulting firm, assesses the business value of blockchain at more than $360 billion by 2026, which is low. By the end of the decade, the blockchain market is predicted by some analysts to be worth $1 trillion. Anticipate a number of events that could significantly impact blockchain's potential trillion-dollar valuation and beyond, such as the following. Digital transformation projects and the transfer of data and workloads to distributed cloud environments depend on blockchain, a cloud-based technology. Blockchain and AI will come together as they complement each other to make blockchain more effective and generate massive amounts of new data that are utilized to create machine learning models that are more dependable. The number of NFT use cases is expected to rise significantly, providing content creators who tokenize and sell their work directly with new revenue streams. Blockchain-enabled Internet of Things, IoT, will increase accountability, stop manipulation, and speed up and secure digital transactions. Blockchain-encoded smart contracts will make transactions easier, more automated, and more expansive possible. Web 3.0 and the growth of the metaverse on the newest version of the Internet will be based on blockchain technology. DeFi aims to offer more transparent, inclusive, and open lending, borrowing, and investment services on the blockchain. Without having to set up and maintain their own blockchain networks, businesses and developers will be able to create, implement, and manage blockchain applications thanks to blockchain as a service. The proof-of-stake protocol will gain more traction as a competitive substitute since it chooses validators based on the amount of assets they possess, avoiding the computational burden of proof-of-work schemes. Distributed ledger technology will take the role of conventional paper-based methods in government. Expect blockchain to be at the center of federal, state, and municipal legislative and regulatory actions in response to cyber attacks, scams, and indictments. Blockchain technology will stimulate the creation of new coins and exchanges for them. Security, privacy, scalability, and interoperability are just a few of the areas where blockchain technology will continue to advance and grow as long as academic institutions, governmental organizations, and commercial enterprises fund and investigate it. And now we reach the end of this video. Hope you liked this topic. Do follow us for regular updates of blockchain technology. To become a blockchain pro, join our course. For more information visit www.bbe.academy.